Good evening and welcome to our taxation class. This is advanced taxation class and I am your teacher for today, Chimaroke. Today, we are going to be looking at pioneer legislation. Now, this topic has been chosen because of the last topic we did the last class. In the last class, we dealt with taxation of business income, and we saw the commencement rule, the cessation rule, and the change of accounting rule. Now, we saw the new Finance Act that came effect since 2020 year of assessment for companies and 2021 year of assessment for businesses. We also looked at the old Finance Act, which sometimes questions are being taken from there. And so, because questions are sometimes taken from the old Finance Act, or sometimes you will be asked to do a mixture of both the new and the old, we saw it fit for us to learn the old one. Now, we are going to be dealing on pioneer legislation. Now, whenever ICAN want to set a question on commencement rule or cessation rule, they can use a number of means. They can set a straight commencement or cessation rule, no problem. They can go through the way of pioneer legislation. They can also go through the way of merger and acquisition. And so if we are learning about pioneer legislation, you are reinforcing the knowledge you've gotten from commencement and cessation rule, but with a few exceptions. So I will need to tell you that pioneer legislation has plenty of reading stuff. We are not going to dwell much on the reading stuff. We are going to dwell mostly on the calculation stuff. We are going to be talking about the reading stuff that relates to the calculation stuff. So you will be seeing me going through a lot of material to get that calculation stuff. So I'm going to tell you enough information that will help you to do your calculation. Because most times, the question you are given, you will be asked to calculate. You may be asked to write short notes or so, but for a professional class, you may not be asked to do many of those short notes. But it's good that you read them and it will make for a good read. I always tell people to use the ICAN study pack. The ICAN study pack is your best bet for the pioneer legislation. So the ICAN study pack here is your best bet. So that is what we mainly use here. That is what we mainly use here. I also have some smaller notes which has been compressed, which we can use here. You can use it to, understand the bigger one. So let's start. What is pioneer legislation? Pioneer legislation is a tax incentive. Now, when I say tax incentive, it means that this is a kind of tax, let's say rebate, or something that will enable you to do business in Nigeria, or this is something that cushions the effects of taxes in Nigeria. So it's a tax incentive. This is an incentive to want to declare, incentive to want to calculate your taxable income, an incentive to want to pursue the line of business. So pioneer legislation is a tax incentive legislation now which grants relief. So it grants relief, tax relief to certain industries. So there are certain industries that this relief is being granted to, not all industries. Now, these industries here will be engaged in the manufacture. So there are manufacturing industries that are granted this pioneer legislation, and they are manufacturing specified products. It could also be a service industry that is servicing specified services. But mostly here, we talk about the manufacturing company. So the pioneer legislation is backed up by something called the Industrial Development Income Tax Relief Act. So this act is what this is the Act of 1971, IDA Act, is what is used for pioneer legislation. So that it came into Nigerian law in 1970, April 1st. All right, so what about some definitions that we'll need to know? There are certain definitions we need to know. For example, where you see the council, we mean the National Council of Ministers or the Federal Executive Council. Where we have the minister, sometimes you will see in your reading the minister, you mean the Minister of Industries. Now, production day, this is a very important term here. It is the day on which the trade of a pioneer business commenced for the purpose of CIT. So the day you commence commercial trading on your pioneer product. So the day you engage in commercial production of your pioneer product is your production day. Now, this term is very crucial in this topic. This is a very crucial term, and so we need to take special notes of it. Now, not everybody, not every company can just go and become a pioneer company. For you to become a pioneer company, okay, so you must have certain conditions. So what are the conditions? One, the applicant must be engaged in an activity listed as a pioneer industry. So it means that one, you must be engaged in that industry that is listed as pioneer industry. So it means that if the government is saying that manufacturing of um, cars is a pioneer industry, you must be engaged in the manufacturing of cars. Also, provision of all required regulatory compliance documents. So I said before, the pioneer legislation topic is having plenty of reading materials. So you may want to look at what are those compliance documents you may need. So you may need to know that. Then you must pay the accompanied non-refundable fee of is 200,000, not 200 naira here. So it's 200,000. Let me adjust that. 200,000. So that's it. Then the minimum qualifying, so there is minimum qualifying expenditure. Now this expenditure has to be either before or on the production day. So those capital assets that you are using to make those manufacture or those industry that you are engaged in to operate for you, those qualifying capital expenditure shall not be less than 100 million, either for both indigenously controlled company. Indigenously controlled company is a local company. So let's say, for example, you are into telecommunication. Now let's use telecommunication as an example, and we have an example of Glow. Glow, Glow Nigeria, if it is into telecommunication, it is engaged in a pioneer industry, pioneer activity, has the regulatory documents. He has paid the 200,000 non-refundable fee for application. Then the qualifying expenditure it has shall not be less than 100 million naira. And Glow is an indigenously controlled company. That means the person who has the controlling power, the controlling right, if it's a company is 51% and above, you have controlling rights. So it is indigenously controlled by Nigeria. And MTN is not indigenously controlled, but because it is trading in Nigeria and is providing this service in Nigeria, that is what they mean by in the case of other company. So those ones that is not indigenously controlled, and the ones indigenously controlled will have to meet that minimum qualifying expenditure requirements. Then during the pioneer period, the performance report must be submitted for monitoring purposes. And the last one, the Federal Executive Council must make a declaration of approval. So these are all the conditions. You may not need to remember all of them. Just remember the ones that is easily coming to mind. Must be engaged in pioneer activity, provide compliance documents, non-refundable fee of 200,000, minimum qualifying capital expenditure of 100 million naira. Then if you can remember the monitoring, the performance report, that's fine. Now, what is the application? How do a company apply for a pioneer status? Now, the pioneer status here can be applied for. The applicant shall state in his application whether the company is an indigenously controlled company. So there's a column where you fill that. Then you will give the particulars of the qualifying capital expenditure to be incurred. So when you give the particulars, you give the name of the asset, the type of asset, the cost. Then the place to which the assets will be situated. Then if you have to collect any loan, give particulars of the loan and share capital of the firm. Then you also give the particulars of the promoter of the company. It could be one person, it could be more than one. So when you apply for pioneer company, so you apply for this special status called pioneer status, you are given a tax incentive. Like we said in the beginning here, is a tax incentive which grants tax relief for industries that are engaged in some manufacturing of products. So it means that in, in granting that tax relief to you, it is an incentive for you to apply for pioneer legislation. Now, you'll be given two certificates when you make an application and when it is approved. The first one is called the Production Day Certificate. So, we'll talk about that. Now, this Production Day Certificate is the first certificate you get. Then, you also have the Pioneer Certificate. So, what is a production day? We need to know the production day so that we will know the production day certificate. Now, the Industrial Development Act, which is IDA, Industrial Development Income Tax Relief Act, or the IDA, requires that no later than 1 month after the material date, a company shall make an application in writing to the Industrial Inspectorate Director to certify the date of its production date. Okay, it says that no later than 1 month. What does it mean? It means that not more than 1 month after the material date. So we need to know what is material date. Material date is the date in which you begin commercial production. That date you give as your proposed date for your commencement of commercial production is your material date. So proposed date is the date you wish to start. Material date is the date you actually did commence production of your commercial quantities of these pioneer products. So let's say, for example, you started it in May 1, and this place says no later than 1 month. So it is no, you when you are making this application in writing, it must not go beyond June 1st. So it means that after you have started your production, you have kickstarted the whole thing. You can write the letter the next day if possible. You are correct. You can write the letter that same day. You can write the next day. You can write the next week, the next 2 weeks, but no later than 1 month. So it must not exceed 1 month. You are writing to the inspectorate director to certify your production day. So you are writing that, look, I have started material production, I've started commercial production on 1st of May 2024. And please, can you certify that date as my production date? Now, what is the importance of that? It will be filed, and when it is certified, the production day is the commencement date of the pioneer status. So it means that date you started commercial production, that material date is the commencement day of the pioneer status. So it's important to have that date. And in every ICAN question, that material date will be given to you. Okay? So the tax holiday that comes from being a pioneer status. So when you apply for this pioneer status, the thing that makes it a tax relief incentive is that you are given a tax holiday. It means a tax holiday means you pay no tax. You're on holiday on taxes. Or your tax relief starts from that production date and it will run for 3 full years, or we say 36 full calendar months. Not 35, not 34, not 37, 36 full calendar months. So that is called an initial period. So when they say an initial period, it means that you can have additional period. So your first period will be 36 full calendar months. Then if the minister is satisfied, he can give you either additional 12 months or he can give you additional 24 months. He can give you the whole 24 months at the same time, or he can give you, take the first 12 months, let me see your performance reports again. If I'm satisfied, I can give you another 12 months. The minister can say, oh, I'm not satisfied. After these 36 months, you can decide not to continue. You on your own part, the one who sought the pioneer status, you can on your own say that I don't need to extend my pioneer period. Now, there is something called cancellation of pioneer certificate. So before we come to cancellation of pioneer certificate, after the production date has been certified, then they will go ahead and give you something called the pioneer certificate. So first they are certifying your production date, then they are certifying that you are now a pioneer status. If you look at Tax Pro Max, which is being used currently, you'll find out that if you're looking at tax profile of the company, if the company is a pioneer, they will say yes. You will see the production date, you will see the pioneer status. But if it is not a pioneer, most companies I deal with, they are not pioneer companies, so you will see that place saying no. Now you have your production date certificate, that is to certify that date, and you have pioneer certificate to certify the company as a pioneer company and that is dealing in a pioneer industry or pioneer activity. What will make someone cancel a pioneer certificate? Now, the pioneer certificate can be cancelled if the production day has been certified on a date which is more than 1 year later than the estimated date given. So normally you are writing that your company should be certified. We said that you are writing and your letter should go no more than 1 month. Now you've written the letter and they want to come and inspect, certify you, and it's taking them more than 1 year. So it means you've told them that in your letter that in May 1st, you wrote it in May 15th, so to speak, that you started pioneer activities commercially on May 1st. Please certify that date for me, May 1st, 2020, let's say 2022. And they came maybe in December to verify it, and they give you that pioneer certificate. Now that pioneer certificate is fine. But if they come maybe June the next year, now that is more than 1 year. So that pioneer certificate has been cancelled. because you stayed 1 year and you have not been certified. If they came maybe May next year, if you started in May 1, and maybe they came maybe April last year, the next year, it will still fly because it's not more than 1 year. But if they come May, so normally it's supposed to run from May of this year to April of the following year. So if they come after that first anniversary, that's the best way I can say it. If the production day was certified more than the date after the first anniversary, then it can be cancelled. However, the council will not cancel the certificate for this reason if it is satisfied that the delay is due to causes outside the control of the company. So if it is proved that the delay for getting this certificate for production day is something beyond your control and they are satisfied with that, then they will not cancel. But if the delay was from you, you were just thinking you have time and all that, and the delay was from you, it will be cancelled. Another reason for cancelling is that the qualifying capital expenditure is less than the prescribed minimum amount. We said it's 100 million, and you acquire it for less than that minimum amount, is going to comply, is going to cancel it. Then the company applies for cancellation for reasons best known to them. So if the company says, okay, please, we want you to cancel the pioneer status, pioneer certificate, they will go ahead and honor it. This is best known to you. Or the company contravenes any provision of the IDA. So it contravenes any of its provisions, it will be cancelled. All right, let's look at the income tax relief. We said before that a pioneer company enjoys tax holidays for 36 full months, which we call an initial period of 3 years. After that initial period, the tax relief can be extended to a maximum of 2 years. So it means that no pioneer company can stay more than 5 years as a pioneer company. So it can stay 3 years, it can stay 4 years, it can stay 5 years. Now, the extension after the first 3 years could be 2 periods of 1 year each. Like I said before, the minister could say, okay, I'm going to give you 2 years extra, but I'll give you one year each. Let me see your performance. And if he's satisfied in the first one, he grants you the second one. He could decide that he may even grant you only 1 year and you will not get the fifth year. Or you may decide that, okay, let me just grant you the 2 years at once, one period of 2 years. So we go to income tax relief and other tax implications. What are the tax implications? Because this is where we are after. Now, the pioneer company is granted for initial 3-year period. What are the implications? One, if the company is already in existence, that means the existing company comes to an end with the pioneer status on the production day. Now, this means that the company will experience cessation of business. So, I said before that sometimes when they want to test your application of commencement and cessation period, So they can use pioneer. So it means that the cessation rule will apply to the existing company when it ends on the production day. So if you remember what we talked about cessation rule in the new law, if the company ends or ceases business before June of a particular year, it means that it will file tax 6 months later, the same year it ceased operation. And it is possible that he may file two tax on that year, one on preceding year basis and one based on cessation filing. That is for the existing company that is ceasing business. We also mentioned that if the company ceased operation between July to December, then it means 6 months later will be the date or the year the company is going to file its tax. So it means the company ceased in July, let's say July 1 or maybe July 30th. January of the next year is when it's going to file its cessation tax. So the cessation rule will be activated if the company is in existence. Now, if the company is a new one or even an existing one, on the day that the pioneer status ceases, on the day that the pioneer status ceases, now whether by cancellation or by completing its term, the next day after the end of the pioneer status, the company is seen as a new company and the commencement rule applies. So let's say the company is ceasing, is a new company. Let's say the company is an existing company and it ends on a production date, because on the production day you're supposed to be certifying your company as a pioneer company from that date. That means the date on the production day is your cessation date. Technically, the day before the production day is your cessation date. So that means the company ceases business on that date. And the next day, which is the production date, the company commences pioneer status. And so the company is into pioneer. Now, let's say the company is a new one, and when the company is a new one and it is doing pioneer, it is doing a pioneer job, or yeah, even if an existing company and is doing a pioneer activity, after that 3 years that the company finishes its term, after that 3 years, whether it finishes term or it is cancelled, or if there's an extension, anytime the company is no longer a pioneer status, the day after the company ceases to be a pioneer status, the company is seen to be commencing a new business. So you see, yes, commencement rule applies here. So you see something in a question, a company might be in existence and you'll be seeing them filing tax, you'll be seeing information about filing tax. Then they now give you a commencement, they now give you a pioneer date, which is a production date. You know that you will do cessation rule because before the production date, the company was in existence. Sometimes you will see a pioneer company and activities being talked about. Then after, you now see them bringing taxes and accessible profit and all that. You know that you are doing commencement of business because the pioneer would have ended and you would have started a new business. Now, it is possible that they can combine both cessation of business and commencement of business in one question. Could just be a question about one question, and the company was in existence and it started a pioneer company. Then maybe perhaps after some time, after the initial 3 years, it did not extend and it now wishes to still continue, but it is not in a pioneer status. It's not in pioneer status. So commencement of business would have started. So it is possible that these two could be fused in one question. I have not seen, most times it's commencement that is usually being done. I've seen once when it was in cessation, but I could bet you that one day they might fuse the two into together. All the profits for the pioneer period shall not be taxed. So it means there is nothing like accessible profit, there is nothing like taxable profit, there is no tax, no CIT, no education tax, no police trust fund, no tax. You are enjoying a tax holiday. Now, that is for profit. What about if there is any loss? So we said any aggregate loss. Now, what do we mean by aggregate loss? Now, let's use a 3-year period. If we add all the losses together in the 3 years, it becomes aggregate. So it is possible that in the first year of Pioneer, you may make a loss, let's say a bigger loss, a very big loss. The second year, you might make a loss, but very small than the first year. Then maybe the third year, you might make a profit. Now, because you made a profit in the third year, if they add the first year loss with the second year loss and the third year profit, if it results into an aggregate loss, this is also included in what we call aggregate loss. So it's not compulsory that the whole 3 years you must make loss. It is possible that you may make profit the first year, make profit the second year, maybe your profit is going down. The third year may be making a loss. And when you add everything together, it gives you a loss. So the thing is, you add the periods together and you have aggregate loss. What happens to the aggregate loss? It shall be deemed to have incurred on the first day of the new business. So it means that when your company is ending its pioneer status, when it is ending, you are checking your losses as against your profit. If your losses if it gives you an aggregate loss, on the first day of your new business, it is assumed that that loss is carried over into the new business. You see here, when you have profit, the profit is not taxed. That means your profit is not carried over to any period. But when you have loss, you will carry that loss to the new business. Thus, the new business shall relieve the loss from the profit it makes. Now, no loss from an existing business shall be relieved in the pioneer business. Now, if you make a loss before you went into pioneer, you will deal with your loss. You will not carry it into the pioneer business. Why? Because what's the point when you're not charging tax, when you're not being taxed? Why would you carry losses inside? It's of no need, it's of no use. So you will deal with the losses. And now the thing is this, there is a danger if you are ceasing business and you have an unrelieved loss as at the cessation date. That loss is deemed to have lapsed. It cannot be carried forward. That is what it says. The loss is deemed to have lapsed and cannot be carried forward. Because there's something called carry forward losses. That is, if you're into business that is still ongoing, any loss you make, you carry it to the next year, you carry it to the next year until you have enough profits to relieve it. But because this is, you're moving from an existing business into a pioneer business, when you are in cessation of your business, any loss cannot be carried forward because you're not going into business. Now, that loss is lost forever. What about capital allowance? Capital allowance is not granted in the pioneer period or in the pioneer business. So you see why you don't need to carry any losses into it, because you will not even be granted capital allowance. Capital allowance is usually granted to relieve you of tax burden, to reduce your tax burden, but you're not paying tax. And so you do not grant capital allowance. Now, any assets at book value or at cost before the pioneer period will remain so till the end of the pioneer period. So what it means here is, even though you are doing depreciation of your assets every year, you will not claim capital allowance. So it means that if you buy a vehicle that is supposed to last for 4 years, and on the first year you use that vehicle, the next year you get into pioneer business. Normally, in the eyes of the law, when you started your depreciation or the use of an asset, you should have a useful years, a tax useful years. So for motor vehicle is going to be 4 years, and now 1 year has passed. It's supposed to be 3 years remaining. Now during that three initial pioneer period, it's as though they've put a pause on the calculation. So the next year is still remaining 3 years, the other year is still remaining 3 years until the end of the pioneer period. So you would have spent 4 years. Somebody who is not into pioneer would have fully claimed his capital allowance by the time you are coming out of pioneer. But you yourself, when you are coming out of pioneer, you now continue from where you stopped before the pioneer. So capital allowance cannot be granted. The capital expenditure made in the pioneer period is deemed to have occurred in the new business. So that is why you see here that they said before the production date, you must have made your capital expenditure up to the tune of 100 million or more. Anything you buy into the pioneer period is not counting for you. It is counted as though it is purchased on the first day of the new business. Now, any capital allowances that is unrelieved before you enter pioneer. Now, any capital allowances unrelieved at the pre-pioneer period is not deemed lapsed. Now, unlike profit or loss, unlike loss that you had at the cessation date, and we say it is lost forever. If on the cessation date you have capital allowances that you have not fully claimed, now that capital allowances you have not fully claimed is not deemed loss like loss. But what happened? There is a rule in capital allowances that asks you to carry your capital allowances backward for 5 years. So that is what you will need to do. You have to carry them for 5 years to relieve from your profits of the previous 5 years. So that's what happens. Any capital allowances after that 5 years of carry back and you cannot claim all your capital allowances, then it will be deemed to be lost or lapsed. Now, when we are reviewing the capital allowances backwards, all the taxes that have been paid in the previous years will be refunded to the company, which will be used to relieve the capital allowance. So it means that your capital allowances will be to just be a kind of they may not give you the cash, they will only use that your profit, no, your tax paid to re, re, to relieve your capital allowance. So it's just an exchange thing. They will just rearrange or they will just make an adjustment in the entry, and you will see your new capital allowances will be recalculated for the past 5 years just before the cessation period. And if you cannot relieve it, then it will be reset to zero, meaning that you cannot claim all your capital allowances. Now, what about the offenses? Anybody making any false declaration is also liable. Then, if production of any invoice or undertaking which is false in any material particular is also making you culpable or liable. And the penalties is that you will be charged to conviction of 5 years, or you pay a fine, or you go to prison and pay the fine. So all of this is just a summary of all the things you can see here in your Pathfinder or your study pack. So if you go to your study pack on page 210, you can see some of the write up here. You can take your time to read through. Like as I said, I will give you enough information that will help you to make a calculation and make you pass this class. So not everything that is written here will be tested. We've just extracted the most important ones and we've just dealt with it. So now we will be going into some nitty-gritty. Okay, this is where we stopped here. We will now be going into the main thing, which is solving of questions. We will now want to solve a question. We will solve a question and we'll see how the question pans out. Okay, so what I will do now is this is illustration 1 and this is illustration 2. I will give you as assignment which you will need to submit. But we'll look at the past question here, or we look at we'll look at the question here. Okay, so it's the same thing here. These questions are also in your study pack, so we will likely look at it, or we'll leave it as an assignment for you. But we'll look at past question papers, and let's see how we can deal with past question papers. We have one of the recent ones. This is one of the recent ones here. This is another recent one. This is another recent one. All right. This is 2021 May, question 2. 2023 November, question 1. Okay, so we will do the one that is smaller first. We'll do this question 2 now for the sake of knowledge. All right, so this is May 2021, question number 2. So we will go to our whiteboard now, and we will start writing. This is ICAN. May 2021. Question number what? Question number 2. Question number 2. That is our focus for now. All right, so what do we do? We said the quest for economic development in every sector of the country has enabled the federal government to come up with various tax incentives. Underline the word tax incentives, especially for pioneer companies. Nature Agricultural Products, this is the name of the product, this is the name of the company. A medium-sized company. Now, it is important to note that this is a medium-sized company. What makes a company a medium-sized company? It's because a medium-sized company um, has turnover between 25 million and 100 million. A small size company has turnover less than 25 million. A medium size is between 25 to 100 million, and a large size or a big size company is over 100 million. So it's of importance to note here that this medium sized company is being stated. So note those keywords as they come in the exams. Now, this is agricultural company. Now, because it is agricultural company, this is agricultural company, the capital allowance is not restricted. Capital allowance, one of the capital allowance rules is that if you are agricultural company, manufacturing company, the capital allowances is not restricted. There is a rule in capital allowance that you must use 2/3 of your accessible profit to relieve capital allowance. But when it is agriculture or manufacture, these restrictions doesn't apply to them. Now, we were told that this company was incorporated on January 10, 2015. Now, This date of incorporation is the date on their CAC certificate. Now, that doesn't mean that is the date that they started the company, that they start production. You can start a company, incorporate it legally. It's as though you give birth to the company on that day. All right. As a manufacturer, now this is a manufacturing company of animal feeds. You see? So it's a manufacturing company. So capital allowances is not restricted. Thereafter, the company applied for pioneer status, applied for pioneer status, and was granted a pioneer certificate with a production day of March 1, 2015. Okay, March 1, 2015. Okay, so you see here, March 1, 2015, you know that your initial 3 years will start from March 1, 2015. Okay, March is 3, March 1, 2015, and it will end when? So from March to February, March to February. So it will end in February 28th of what year? So 2015, if you add 3 years to 2015, it gives you 2018. So this is going to give me 2018. So this is 2018. I think I'll have to be consistent in the way I write the years. Okay, so this is 2015. So in your answer book, you may just be using pencil as you are reading. You can be making some of these short notes. You may not want to do it in your question paper because they may be right. They may ask you, do not write anything. I will tell you here, do not write anything here. Okay, this is, they didn't write it here, but they will say, do not write anything on the instruction on your question paper. So you know that your production day is 1st of March. This is your production day, and this is when the initial pioneer period will end. That means a new business should commence on March 1, 2019. Sorry, 2018. March 1, 2018. You are going to commence a new business. March 1. Now they said the details were provided in respect of business operations of the company. And now you are seeing net profit for the year ended February 28, 2019. So what does it tell you? If you come here and you say February 28, 2019, when did this, they said year ended, that means it must be 12 full months. When did it start? It must have started March 1, 2018. 2018. Now, what does that tell you? It tells me that this day is the same thing here as this date. These dates are the same thing. They are the same thing. So it means after the pioneer ended, after the first initial 3 years, the pioneer did not continue. Who knows? They will tell us that. But this is the initial 3 years. You need to note the initial 3 years. This is the year after the initial 3 years. So the year after the initial 3 years, you are having a net profit of of this. Then the above net profit was arrived at after charging the following. Look at the things that was charged and capital allowances or expenditure incurred on or before February 2018. So this is February 2018. February 28, 2018. So these are capital expenditure that were incurred before the end of the pioneer period. Before the end of the pioneer period. Okay, so all these ones here were acquired during pioneer. So it means that because they were acquired during pioneer period, you do not see them as you do not claim capital allowance on them. You see them as though they were acquired on the 1st of March 2018. 1st of March 2018. So 1st of March 2018. Now this accumulated profits, so this is the profit of the pioneer, because as at February 28th, so this is pioneer profit. Now, assuming it was a loss, you would have seen it as accumulated loss, and it will have been incurred on the first day of the new business. Now, they said the management of the company did not apply for extension of the pioneer period. Now, you are to compute the adjusted profit for the relevant years. So, adjusted profit for the relevant years. They use the word here, relevant years. And you have to find the tax liability or for the relevant years of assessment. So let's look at it this way. Let's write all the things that we are given. We are given production day. March 1, is it 2014, 2015? March 1, 2015. Pioneer period. So the pioneer period is equal to 36 months, i.e. from March 1, 2015 to February 28, 2018. Accumulated profits in pioneer, we are told $3,968,000. So this is 968,000. That's your accumulated profit. Then we are also given new business. New business commenced, commencement, commencement date. That is the day after March 1, 2018. End of first year is going to be 28th of February 2019. Okay, so a company that starts, the new Finance Act says that 2020 year of assessment for companies is when the Finance Act begin. It means that any company that started business in 2018 is possible because your year of assessment ends in 2019, which is the preceding year to 2020, you fall under the new regime. But if you start your business in 2017, then your first 2 years of assessment will be in the old regime. So this question was carefully chosen so that you'll be using the new Finance Act. So the end of the first year of assessment is 2019. Then your year of assessment will be what? 2020 year of assessment. Basis period will be March 30, March 1st of March 2018 to February 28th, 2019. That's your year of assessment, and that's your basis period. So what do you do now? The name of the company we are given is Nature Agricultural Products Limited. Meanwhile, you will say company is manufacturing capital allowance not restricted to 2/3. All right. You can even say qualifying capital expenditure is seen to be acquired on 1st of March 2018, even though they were bought on or before February 28th, they were all seen to have been acquired on the first day of March. Then what again do we need to write about? Pioneer was not extended. That is not a problem. So we are asked here to do the first one, which is, what's the name of the company again? Nature Agriculture Limited. Is that it? Nature Agricultural Product Limited. Agricultural Products Limited. That's the name of the company. So the first thing we're asked to do here is adjusted profits. So what are the adjusted profits for the relevant years? So what we do now is we go to where we have our profits and we adjust it. So we will say for year of assessment 2020. So this is year ended 28th February 2019. Yes, that's it. Year ended February 28th, 2019. And put your bracket, your Naira sign here, and your Naira sign. So we'll start with the net profit that we have in our book here. Net profit. And what were we given? We were given 15,350,000. 15,350,000. Now that is what they declared as their net profit. So what do? They said the above net profit was arrived at after charging the following. So we look at all these things we are being charged. We will need to remove some of them. So we add back. There are certain things we need to add back that are not allowable. Because when we say charge, it means we have deducted them to arrive at net profit. We need to add them back. So we add back, we say add backs. What are the things we are adding back? We have depreciation. Depreciation. How much is depreciation? Depreciation is 1,725,000. 1,725,000. That's depreciation. The next one is legal charges for purchases of freehold rights, loss on revaluation of plantation, fines for traffic offenses, expenses in increase in share capital. All of these are not allowable. So we'll add them back. Legal charges for purchase of freehold rights, 1,500,000. We'll say legal charges on freehold rights. Let me write it well. Legal charges on freehold rights. And we have 1,500,000. We have loss on revaluation of plantation. The loss was deducted. We are adding it back. Loss on revaluation, 2,104,000. Loss on revaluation, 2,104,000. Then the next thing here is fines for traffic offense. it was deducted, we added back 70,000. Fines for traffic offense. Fines for traffic offenses, 70,000. What's the next one? Expense on increase in share capital, 1,201,000. Expense on increase in share capital, 1,201,000. 1,201,000. Expense in increase of shares. So let's see if there's any other one again. There is none. So what do? We add this one, we add all of this here. So let's bring our calculator out now. So 1,725,000, I will leave the thousands for now, plus 1,500 plus 2,104 plus 70 plus 1,201. Now that will give me 6,600,000. I will write it down here. 6,600,000. Now, if I were to add 6,600,000 to 15,350,000, that will give me 21,950,000. So 21,950,000 is our adjusted profit. So this is our adjusted profit, which we just did here, according to how the question asked it. Our adjusted profit is 15 million. Now, compute the tax liabilities for the relevant assessment years. Now, we need to, this is the A part, the B part here. Tax liability for year of assessment 2020. All right, so we'll put our 2 naira sign here. So we'll start with our adjusted profit. Adjusted profit, we'll say see the A part. Our adjusted profit, which we just calculated here, is going to be 21,950,000. That's it. We will now check if there's any loss that was carried. There was no loss, no accumulated loss from the pioneer period. This is just profit, no losses. So there is no loss. We will now have to do less capital allowance. Less capital allowance, we'll do workings 1 to get that. Now, after we get our capital allowance, we'll put it down here. Then okay, so what we'll do in capital allowance is here. This is the way we are going to do capital allowance in workings 1. We are going to get capital allowance, but we will start with Is there any capital allowances that were unrelieved before the period? No. So we'll just say, capital allowance for the year. Then we'll now say less capital allowance charged. So we'll bring it down here, and we'll also bring it down here. Then whatever we remove, this will be capital allowance carried forward. So whatever we have here is what is carried forward. Then the next one will be taxable or chargeable income. Will be anything when we minus this one, whatever we get here is our taxable income. What are we asked to find? Tax liability. Then we'll come here and I will say tax liability. So CIT at 20% of taxable income. So why are we using 20%? This is because we were told that it is a medium-sized company and the tax is 20%. So tertiary education tax at 2.5%? Yes, 2.5%. 2.5% of adjusted profit or accessible profit, because this adjusted profit becomes our accessible profit because there is no loss relief. So we already know the answer here. 2.5% of 21,950,000. So we'll say, we'll just do that one right away. We have 21,950,000 here already. We will now multiply by 2.5 divided by 100. And that will give me 58,750. So I'll write it down here. Sorry, 548,750. That's your tertiary education tax. There is no minimum tax for companies into the agricultural business, or for companies that are within the first 4 years of business. There are no minimum tax. So minimum tax is 0. We're not going to do the minimum tax. So we are going to do this now. So what we will now do here is we'll set the template. And we'll now go to workings. Workings 1 is our capital allowance that we want to do. We want to do the capital allowance. Now, when you are doing capital allowance, this will take your whole time. So you need to be you have to be speeding up. So we have here motor vehicle, industrial building, ranching and plantation, furniture and fittings. So let's see, we have 4 of them here. I will write them from the last to the first. F and F, ranching and plantation. So I'll have here total is F and F. Plantation, industrial building, motor vehicle. I think I pretty covered them. Yes. So what we will now do now, we'll go and check what their tax rates are, their capital allowance rates. We have motor vehicle. Where is motor vehicle? Motor vehicle, we have 50 and 25. You will be given. So here is initial allowance rate. So this is 50%. This is annual allowance rate. This is 25%. Let's look at industrial building. Industrial building expenditure, we have 15 and 10. So we'll write 15 here, and we'll have 10. What about plantation? This is not plant and equipment. Ranching and plantation expenditure. This is it. Ranching and plantation, that is how they give the question. We have 30 and 50. 30 and 50. So you write 30 and 50. Okay. We have furniture and fittings. 25 and 20. So we have 25 and 20. So what does this thing means? So I can come here again and say useful years. Useful years. This is not normally required of you in the exam, but you need to know how to get your useful years. I will just say useful years will be 100 all over annual allowance rate. So what it means here is that 100 divided by, for motor vehicle divided by 25 is 4 years. So you can come here, 4 years. For industrial building, 100 divided by 10, that will give you 10 years. This may come handy later. 100 over 50 will give you 2 years, and 100 over 20 will give you 5 years. This may come in handy later. So under here now, you will now put your naira sign, naira sign, naira sign, naira sign, and naira sign. So what do you have? You go to this capital expenditure that were incurred on or before the last date of the pioneer, you bring them down. You call them capital expenditure at cost. Motor vehicle is 6,500,000. So let me just write it here. 6,500,000. You say qualifying capital expenditure, say cost, 6,500,000 here. Industrial, 14,680. 14,680. Then we have ranching and plantation, 3 million. 3 million. Then we have the next one is 1,850,000. 1,850,000. 1,850,000. All right. Then you will have to do your initial allowance. Initial allowance. Then you will do your annual allowance. So how do we do our initial allowance for motor vehicle? So I can say this is workings 2, initial allowance. Now say motor vehicle, it will be, we are giving the cost here, 50%. You say 50% of 6,500,000. That will give us what? 6,500,000 times 0.5. That will give us 3,250,000. 3,250,000. That's what you come here. 3,250,000. Then you will do for the next one is industrial building. Industrial building, we know it's 15% of 14,680,000. So 14,680,000 times 0.15, that's 15%, 2,202,000. 2,202,000. So you come down here, 2,202,000. The next one, which is plants, is 30%. Ranching and plants, or ranching and plantation, is 30% of 3 million. That should be 900,000. Let's see. 3 million times 0.3, 900,000. That's it. 900,000. Go up there and write it. 900,000. Bracket. Then for furniture and fittings is 25% of 1,850. Furniture and fittings is 25% of 1,850. You can as well do your calculation and just put the figures, but you need to show your workings. 1,850 times 0.25. So you need the examiner to see your workings. 462,500. 462,500. The examiner has to see your workings for him to have confidence in your work. 462,500. Now you're going to add all these initial allowances to get a positive figure. Though you are writing them in negative, when you are adding them together, you are giving them in positive. So I already have 462,500. I will now add from right to left. I'll add 900,000 to it. I will add 2,202,000 to it. Then I'll add 3,250,000 to it. I have 6,814,500. 6,814,500. Now that's my initial allowance. Then I'll go to the annual allowance here. This should be workings 3. Workings 3. Annual allowance. This is your annual allowance. All right, so the first one is for motor vehicle. For motor vehicle, your annual allowance, we said this is 25% of 4 years. So there are two ways we can do it. We can say 25% of, okay, let me just give the formula first. You can say annual allowance rate times cost minus initial allowance value, or cost minus initial allowance value divided by number of useful years. So whichever you do, you get the same answer. So let's do it together. We have 25% multiplied by cost minus initial allowance figure. The cost here is 6,500,000. 6,500,000 minus 3,250,000. 3,250,000. So what we'll do here, this will be 25% of, let's do our calculation here, 6,500,000 minus 3,250,000. That will give me 3,250,000 because we did it at 50% before. So 50% will give us the same thing. So this is going to give me 25% of 3,250,000. So if you look for 25% of it now, if I say times 0.25, that will give me 812,500. I'll say 812,500. This is my annual allowance. If I decide to do this method, I will say 6,500,000 minus 3,250,000 all over 4 years. That will give me 3,250,000 divided by 4. So when we do divided by 4, 3,250,000 divided by 4, it gives us 812,500. 812,500. So depends on whichever you feel like doing. Divide by the useful years or multiply by the annual allowance rate, you are getting the same thing. So we have your 812,500. I'll bring it down here. 812,500 I will do the same now for industrial building. Industrial building. Now, normally, I was supposed to prorate the annual allowance, right? But this annual allowance is from the commencement of the business date, and it's for a full year. It's for a full year. So that business was from when the business commenced after the pioneer, it was for one full year. So the asset was used for one full year, so no proration is required. So this is industrial building. Industrial building happens to be 10% multiplied by what's the cost? The cost here is 14,860 to 14,680. 14,680. Then the initial allowance is 2,202,000. So let's do it together. 14,680,000 minus 2,202,000. That will give me 12,478,000. Now, when I multiply it by 0.10 or 0.10, it gives me 1,247,800. 1,247,800. So this is your annual allowance here. Take it up here. All right, so we have now the ranching, plantation ranching. Now say ranching and plantation. And I will say 30 and 20, 50%. Yeah, 50%. So we'll just say 50% of 3 million minus 900,000. So what do we get? We have 3 million minus 900,000, which is our initial allowance, 2.1 million. We will now multiply this by 0.5, which is 1,050,000. 1,050,000. So we'll take it up. 1,050,000. 1,050,000. Close the bracket. All right, so we do the last one, which is 20%, 1,850, 462,500. So that's supposed to be furniture and fittings. I'll say furniture and fittings. And we say is 20% of 14, I've forgotten the figure, 1,850, 462,500. All right, let me be sure the second one is correct. 462,500. All right. So what I will do now, I will bring up the calculator again. 1,850,000. That's 1,850,000 minus 462,500. That gives me 1,387,500 multiplied by 0.2, which is 20%, 277,500. 277,500. So we'll take it up 277,500. 277,500. So we'll calculate our total annual allowance here. I already have 277,500. I will do from right to left. I'll add 1,050,000 plus 1,247,800 plus 8. What did it do? 812,500. Yeah, 812,500. That'll give me, I'll write it in positive figure, 3,387,800. 3,387,800. 3,387,800. All right, so I'm going to add my total capital allowance here. It's going to be total capital allowance. Is what I'm going to get here. I already have something on my calculator. 3,387,800. I'm going to add 6,814,500. That will give me 10,202,300. 10,202,300. Now, I am not bothered about these ones to get their tax written down value. I don't care about them because I'm not going to use them for anything. I don't want to be wasting my time doing this minus this to get this minus this, because I'm not going for the next year. I'm not needing it for the next year. All I'm after is this capital allowance here, 10,202,300, and I'll take it up down here. Capital allowance for the year is 10,202,300. Now, when you look at the capital allowance for the year, is it up to the adjusted profit? It's not. So you relieve everything. You relieve everything. 10,202,300. The same thing here. 10,202,300. So your capital allowance carried forward is nil. What is going to be your chargeable or your taxable income? I already have this 10,202,300. I'll just press this negative button to put it by side. It's as good as putting it in bracket as this thing is here. And I'll say plus 21,950,000. That will give me 11,747, 11,747,700. 11,747,700. Is that what I have here? That's it. Then I'll come here. My tax CIT is 20% of this figure. So I will say times 0.2. That will give me 2,349, 2,349,540. 349,540. So that's your, I think I'll need to write this one completely. And I'll write this completely so that we don't get confused. This is taxable income. This is adjusted stroke assessable profit. So there's this, there's this. There's no need for you to sum the two of them together. You just give them leave them the way they are. This is for CIT, this is for TET. When you are even paying in remitter, you don't pay them together, you pay them separately. But for management, if you want to put them in your taxes, you need to know how much you are going to provide for tax. So that is where people usually add them together so that they will know the provision for taxes. But this is the answer to these questions. It's a 20 marks question, and we have done it. 20 marks question. Okay? There are other questions you may want to try your hands on. I have these questions here. Let's see questions here that has Pioneer. 2017, we have 2017. So I'll need to put this as an assignment for you here. The part that is, so this is class 7, assignment 7, 2017 question 1. We need to try that. We also have November 2015 question 2. Let's see. We have May 2015 question 4. We also have this one here again. Okay, this is November 2016 question 5. And that's it. Then you can also check November 2023 question 1. So I will just come here and I will say November 2023, and I will say also, let me just say also November 2023 question 1. So how many are you trying here? 1, 2, 3, 4, 5. You are trying 5 questions to see how proficient you can be. Don't forget, these illustration questions here, these 2 questions here can also be found in your study pack. Let me see if they are the same. It's 480 here. They may not be exactly the same. They may not be exactly the same. It's 480 here, 725. Thought I saw 725. Okay, this is exactly the same here. This and this are the same. So this is question 2 in your study pack. Question 1 here. Let me see. So this question 1 here, they are also being solved here at the study pack. They are also being solved here. But the thing about the study pack is that the study pack looked at the old accounting period. The Old Finance Act, the Old Finance Act is what is being treated here in the study pack. The Old Finance Act. Okay. Meanwhile, the New Finance Act is not being treated here. So that's why I decided not to do this question. But you can also turn it into one that will require the New Finance Act by instead of using 2020, instead of using 2008, you can decide to do something like, okay, let me look at it from the question side. You can decide to call this 20x8. Okay, so you can call this 20x9, 20x10, 20x11. So that way, you can assume that you can use the New Finance Act. The same thing here. Okay, in this one, you don't need to change anything. You don't need to change. Okay, this second one also, is number one. The second one also have the Old Finance Act into it. It has the Old Finance Act into it. So that's the reason why I wouldn't do that, because they are supposed to test you with the New Finance Act, which this question number 3 will answer. But because the assignments that you are going to be doing, most of them are based on the Old Finance Act, you may need to watch the video on the Finance Act or the basis period that we have for business income. You may need to watch that again and use that as a basis to do the assignment. So once again, I will say, whenever they give you question on Pioneer, they are not testing you much on Pioneer, they are testing you much on commencement or cessation rule. Little about pioneering in the calculation. The exception here is that the accumulated profit for the pioneer period is not going to be taxed. If there is loss, you bring it as if it is incurred on the first day. Your capital allowances, you will not claim capital allowances during the pioneer period. If they are incurred during the pioneer period, you see them as being incurred on the first day of the new business. These are some of the exceptions, and all you just need to do is to either do your commencement rule, which is most times they are going to be giving you commencement rule, or in some cases, they will give you question on cessation. So this is how far our lecture for today is coming to an end with this one long question we just did, which is ICAN May 2021 question number 2. Take time to review it and see how it will enhance your understanding of the New Finance Act 2019 up to date. So thank you. The video of this lecture will be given to you when it is ready. So until then, we'll be bringing the class to a close now. And thank you so much for coming to class.